So students, now let us discuss advanced tax chapter. General rule is income of previous year is taxable in the assessment year. Exception to the general rule is advance tax. So advance tax is required to be paid during the previous year itself. The reason is the income is earned in previous year but tax is paid in assessment year. Almost 10 to 12 months gap is there in between earning of income and payment of taxes. Let's say I earned income in April 24. As per general rule, I will pay tax in the month of, in assessment year. I will pay tax in 31st before 31st July of assessment year. That means I am earning income in April but I am paying taxes in the month of July next year. So almost more than 1 year gap is there. For this 1 year, government is losing interest on tax amount. So to prevent such loss of interest on tax revenue, advance tax provisions were introduced. So under advance tax provisions, I will earn income in current previous year. In current previous year only I will pay taxes. That means as and when I earn the income, I will also pay taxes. So this reduces the gap between earning of income and payment of taxes. So as soon as assessee earns the income, he will immediately also pay taxes to the government. So government will not lose interest revenue. That is the intention behind introduction of advance tax provisions. Is it clear? Now, so general rule is income of previous year is taxable in assessment year. Exception to this is advance tax, correct? Exception is advance tax. Sir, whether everyone is required to pay advance tax, that is the next question. In two cases, advance tax is not required to be paid. How many cases? Two cases. Case 1, if tax liability is less than 10,000, then advance tax is not required to be paid. Advance tax is not required to be paid. Careful, what is the amount that I have written? Less than 10,000. I did not write less than or equal to. That means even if tax liability is exactly equal to 10,000, advance tax is required to be paid. Are you able to understand? So please remember, only if tax liability is less than 10,000, then only advance tax is required to be paid. Next, in case of resident senior citizen who is not having PGBP income, advance tax provisions are not applicable. Are you able to understand? So resident senior citizens who are not having PGBP income, they are not required to pay any advance tax. Is it clear? So in two cases, advance tax provisions are not applicable if the amount of tax liability is less than 10,000, or in case of resident senior citizen who is not having PGBP income. Is it clear? Next. Now let us see manner of computation of advance tax. Manner of computation of advance tax. How to calculate advance tax? Okay. First, I will give you the format. Note it down. If you understand, okay. Even if you do not understand, I will tell one example. Through that example, you will get complete clarity. Okay. So, step 1 in calculation of advance tax is, let's say previous year 24-25 is there. What is the first day? 1st April 2024. On 1st April 2024, I will estimate my total income in 24-25. I will estimate how much income that I will earn in 24-25. So first step in calculation of advance tax is estimate total income of current previous year. Second step, if you estimate the total income, Then as per the rates applicable for 24-25, you can calculate the tax liability, right? So second step is estimate tax liability. Next, step 3. Reduce estimated TDS, estimated TCS, estimated relief under section 89(1). After reducing estimated TDS, I can estimate TDS, right? For example, I am coming here and teaching in this academy. They will pay professional fees. On that professional fees under section 194J, they are going to deduct TDS at the rate of 10%. So I can estimate my TDS. I have to reduce the estimated TDS and estimated TCS and relief. Balance tax liability, if it is greater than or equal to 10,000, then advance tax is required to be paid. Is it clear? Advance tax is required to be paid. Sir, whether advance tax is required to be paid every month? No. Advance tax will be paid quarterly. Are you able to understand? So, first, advance tax is paid on advance tax is required to be paid on required to be paid in installment basis, in brackets, on a quarterly basis. On a quarterly basis. Is it clear? Now, what is due date for every quarter? Let us see. Due date and amount of advance tax. How many quarters are there? 4 quarters. Q1 range is April to July, right? So for April to July, due date, April to June. For April to June, due date for payment of advance tax is on or before 15th June. On or before 15th June. Sir, how much advance tax is payable? Not less than 15% of tax liability. So, quarter, range, due date, amount payable. Next, quarter 2. What is the range? July to September. Due date is on or before 15th September. How much advance tax is required to be paid? Not less than 45% of tax liability, including previous payments. Previously 15% was paid, right? So including previous payment, he should pay not less than 45%, including previous payments. Next, Q3, range is October to December. Due date is on or before 15th December. Not less than 75% of tax liability, including previous payments. Q4. What is the range? Jan to March. Due date is on or before 15th March. I think today. Today is the due date for payment of advance tax. What a coincidence. Today we are discussing advance tax. 100% of tax liability is to be paid as advance tax. But there is one note point. Those who are paying taxes under section 44 AD, 44 ADA, they are not required to pay advance tax in 4 installments. It is sufficient if they pay advance tax in a single installment, that too on or before 15th March. Is it clear? So, due date for those who are filing ITR under 44 AD and 44 ADA, for them due date is 15th March, single installment, correct? Due date for advance tax in case of SSCs paying taxes under section 44 AD, 44 ADA is only single due date 15th March, single installment. So before this time they need to pay whole advance tax in a single installment. Is it clear? Shall I explain one example? There is an individual whose name is Meera, not shampoo. There is an individual whose name is Meera. She is a resident individual, aged, how much age you want? 50. Sweet 16. Aged 50 years. Her total income is, first, in her total income, there is a salary income. Salary is 24 lakh 30,000. This is after standard deduction, okay, income from salaries. And her income from house property is 2,25,000. Now, how much is her total income? 26 lakhs 55,000. She is paying taxes under default tax rates. She is paying taxes under default tax rates. Now, shall we calculate how much advance tax that she has to pay? Everybody, shall we calculate? First, what is step 1 in computation of advance tax? Step 1 is estimation of total income, that we have already done, right? Estimation of total income. Her estimated total income will be how much? 26 lakh 55,000. What is step 2? Estimation of tax liability, correct? Shall we calculate tax on 26 lakh 55,000 under default tax rates? Now, total income is 26 lakh 55,000. Will you tell me the slab rates up to 3 lakhs tax amount is? Nil. Greater than 3 lakh up to 7 lakh tax amount is 20,000, correct? Greater than 7 lakh up to 10 lakh tax rate is, 10% tax amount is 30,000. Greater than 10 lakh up to 12 lakh tax rate is, tax amount is 30,000. Greater than 12 lakh up to 15 lakh tax rate is, tax amount is 60,000. Greater than 15 lakh tax rate is 30%, right? So 26 lakh 55,000 minus 15 lakhs into 30%. How much? 46,500. How much is tax? Whether surcharge is applicable, total income is less than 50 lakhs, right? So surcharge is not applicable. To this we will add HEC at the rate of, how much it will be for it? Hmm? So how much is estimated tax liability? So this is step 2, correct? Employer will obviously deduct TDS, right? But tenant will not deduct TDS because the rent is less than 2.4 lakhs. In case of rent, TDS provisions will get attracted only if rent is more than 2,40,000 or equal, like, correct. So your rent is less than 2,40,000. So tenant will not deduct TDS. However, employer will deduct TDS. Can we estimate TDS that will be deducted by employer? Can we estimate? Yes, okay. Let's estimate. Step 3, estimated TDS. How much is salary? 24 lakh 30,000. On this, whatever the tax is there, the tax amount will be deducted in the form of TDS, correct? So, shall we calculate tax up to 3 lakhs? Greater than 3 lakh up to 7 lakh? Tax amount is 20,000. Greater than 7 lakh up to 10 lakh, tax rate is 30,000. Greater than 10 lakh up to 12 lakh, tax amount is 30,000, right? Greater than 12 lakh up to 15 lakh, tax amount is 60,000. Greater than 15 lakh, tax rate is 30%. 24 lakh 30,000 minus 15 lakhs into 30%. How much is tax? How much is total tax? 19? Okay. To this we will add HEC at the rate of 4%, right? So how much is estimated TDS that will be deducted by employer? How much is estimated TDS? Add 4,35,000. Now, step 4, balance tax liability. Balance tax liability. Balance tax liability is equal to estimated tax liability minus estimated TDS, correct? So how much tax he is required to pay? 5,05,960. But how much TDS was deducted? 4,35,760. How much is balance? That means balance tax liability required to be paid by Mira is 70,200, which is greater than 10,000, right? So advance tax provisions are applicable. Is it clear? Are you able to practically understand the situation? Now, advance tax is applicable, right? Advance tax provisions are applicable. On or before 15th March, how much advance tax is required to be paid? 15%, correct? 70,200 into 15%. Sorry, yeah, 15th June, I am sorry. How much advance tax is required to be paid? 10,530. Second quarter due date, 15th September, right? On or before 15th September, 45%. 70,200 into 45%. How much? 30? 590. From this, already 10,530 was paid, right? That is allowed as deduction because including previous installments. So 21,060 is required to be paid before 15th September, correct? What is Q3 due date? 15th December. On or before 15th December, 75% of advance tax is required to be paid, right? 52,650. But he already paid 31,590 in first and second quarter, correct? So in third quarter, how much he has to pay? 21,060. Q4 due date is 15th March. On or before 15th March, 100% of advance tax is required to be paid. Total 70,200 is required to be paid. But already paid 52,650. 7,550 has to be paid on or before 15th March. Practical example. From this, what did you understand? In case of SSC, if any income is not subject to TDS, because if income is already subject to TDS, already in advance tax amount went to the government. If any amount, if any income is not subject to TDS, on such income, SSC by himself has to pay advance tax during the previous year. Here, house property income is not subject to TDS. On such house property income, whatever the tax liability is there, on that tax, SSC by himself has to pay advance tax during current previous year. As TDS was not deducted on income from house property, on that income from house property, whatever the tax amount is there, such tax amount SSC by himself has to pay as advance tax during current previous year accordingly. Is it clear? So till here, are you clear? Interest under section 234B. Sir, when 234B interest arises, if advance tax is not paid, or even if advance tax is paid, amount of advance tax paid is less than or equal to 90% of assessed tax. Is it clear? In this case, section 234B interest will be levied. So interest under section 234B, when it is applicable in case of non-payment of advance tax or payment of advance tax being less than 90% of, very important, assessed tax. 90% of assessed tax. Sir, what is the rate of interest? Rate of interest is 1% per month or part of the month. So that 1% is to be calculated on what amount? 1% is to be calculated on shortfall. That means whatever the shortfall of advance tax is there, on shortfall of advance tax, we are going to calculate interest under section 234B. So payable on shortfall. Sir, what do you mean by shortfall? In case of non-payment of advance tax, shortfall means what? We will take assessed tax. From assessed tax, we will reduce TDS deducted, we will reduce TCS collected, we will reduce relief under section 89(1). After reducing this, whatever the balance amount is there, such balance amount we call as shortfall. On this shortfall, advance tax is required to be calculated. Sorry, interest on advance tax is required to be calculated under section 234B. In case of payment of advance tax, but payment of advance tax less than 90% of assessed tax. In this situation, we will take assessed tax. From assessed tax, we will reduce TDS deducted, TCS collected, and relief. We will also reduce advance tax already paid. See, in situation 2, it's not that advance tax is not paid. Okay, it is just that advance tax paid is less than 90% of assessed tax. Whatever the advance tax that is already paid is there. On that, if you levy interest means it is injustice because we already paid some advance tax. Let's say he paid 65% of advance tax. Okay, that means he did not pay 35% of advance tax. On that 35% of advance tax only, interest will be calculated under section 234B. Is it clear? So from this we will reduce advance tax paid. Thereby we will arrive at shortfall. On this shortfall, we need to calculate interest. Is it clear? What is the rate of interest? Rate of interest is 1% per month or part of the month. Sir, from which date to which date interest will be calculated? For which period interest will be calculated? Interest will be calculated from 1st April of assessment year. Will be calculated from 1st April of assessment year till date of completion of assessment. Till date of completion of assessment. From 1st April of assessment year till date of completion of assessment. So did you understand how to calculate interest? When interest under section 234B will be levied, if advance tax is not paid or advance tax paid is less than 90% of assessed tax. In this situation, interest will be levied under section 234B. What is the rate of interest? Rate of interest is 1% per month or part of the month. Interest is payable on shortfall amount. In case of non-payment of advance tax, shortfall is assessed tax less TDS, TCS less relief. If whatever the advance tax that is paid, that will also be reduced. Whatever the advance tax that was not paid, shortfall is there, on that interest will be calculated. Is it clear? Next. Here, I wanted to tell you the difference between assessed tax and returned tax. Assessed tax is different, returned tax is different. Both are not same. For example, I filed my income tax return. I'm in profession, right? Whatever my income is there, that is taxable under PGBP. I disclosed my total income 10 lakh rupees and I paid my tax 60,000. Don't calculate. Rough amount I took. Okay. Immediately Kaushik will calculate, sir, you don't know tax. Okay. You entered the wrong amount there. He will say, no, this is just approximate amount. After I filed my income tax return, the story is not over. Income tax return filed by me will be verified by income tax officer. After verification, he will do some additions. He will disallow certain expenses. I claimed bad debts 40,000, but as per income tax officer, bad debts are only 25,000. He will disallow extra 15,000. So he will do certain additions. He will disallow certain expenses. So as per income tax officer, total income is 11 lakh 40,000. Tax amount is 1.1 lakh. Tax amount is 1.1 lakh. Whatever the income disclosed in ITR is there, this we call as returned income. This we call as returned income. Whatever the tax that is payable on returned income is there, that we call as returned tax. Whatever the income that is finalized by income tax officer is there, that we call as assessed income. Whatever the tax on assessed income is there, that we call as assessed tax. So with this, did you understand difference between assessed tax and returned tax? Assessed tax is different, returned tax is different. Is it clear? Now, What is current previous year? 24-25, correct? So in 24-25, how many installments are there? Q1, Q2, Q3, Q4, correct? And after that, assessment year will start 25-26. For Q1 due date is 15 June, correct? For Q2 due date is 15th September. For Q3 due date is 15th December. For Q4 due date is 15th March. Within these due dates, if advance tax is not paid, within the due dates in current previous year, if advance tax is not paid, then interest will be levied under section 234C. Is it clear? Interest under section 234C will be levied. That means 234C interest story will lend after completion of current previous year. After completion of current previous year, in assessment year, no more levy of interest under section 234C. Is it clear? Interest under section 234C will be levied only during current previous year if advance tax is not paid within the due dates. Are you able to understand? Sir, for this period, then for this period, if 234C interest is not levied, then interest lost to the government, right? From 1st April of assessment year onwards, interest is levied, but interest is not levied under section 234C. Interest will be levied under section 234B. Is it clear? See, interest will be levied continuously, but the section is changing, method of calculation is only changing. From date of default onwards till it is completely paid, interest will be levied. But up to completion of current previous year, interest is levied under section 234B. Accordingly, 234C. Accordingly, we will do the calculation. Once previous year is over, once previous year is completed, starting from 1st April of assessment year onwards, we are going to calculate interest not under 234C. Interest will continue, but interest is not calculated under 234C, but it will be calculated under section 234B. Is it clear? So, up to which date interest will be calculated? Up to date of completion of assessment. So now did you understand? After this chart, during current previous year, advance tax not paid within the due dates, interest is levied under section 234C. Once current previous year is over, starting from 1st April of assessment year, no longer interest is levied under section 234C, but interest will continue and it is levied as per section 234B. Sir, what is the difference? Under 234C, we are going to calculate tax on returned income. Under 234B, we are going to calculate tax on assessed income. Method of computation is getting changed. That's why. Okay. I will tell you the logic also. In previous year, can I expect income that will be increased by income tax officer? I cannot expect. That's why whatever the income that I am disclosing, on that income, whatever the tax that is there, if I pay advance tax for that income duly sufficient, no interest will be levied under 234C. So from 1st April of assessment year onwards, like whatever the tax determined by income tax officer is there, assessed tax, on that interest will be levied. Is it clear? Are you able to understand? Next, shall I discuss interest under section 234C? Everybody? No energy. Did not eat breakfast? No? Interest under section 234C. Interest on default of installment payments. Interest on default of installment payments during current previous year. Interest on default of installment payments during current previous year. How many quarters are there? Quarter Q1. What is due date for Q1? Due date is 15th June. How much is advance tax payable? Greater than or equal to 15% of tax liability. Correct? Let us give one name. This is considered as A, advance tax payable. This will be compared with actual advance tax paid. Actual advance tax paid. Actual advance tax paid. I am going to give name B. Difference between A and B is shortfall. Shortfall is equal to A minus B. That means advance tax required to be paid minus advance tax actually paid we call as shortfall. On the shortfall amount, interest will be calculated. What percent interest will be levied at the rate of 1% per month for 3 months. 1% per month for 3 months. What is due date? 15th September. Correct? Tell, due date is 15th June. I am sorry. Due date is 15th June. From 15th June to 15th September, how many months are there? 3 months. 15th June, like 15th June to 15th July 1, July to August, August to September. There are 3 months, right? So interest will be levied at the rate of 1% per month for 3 months. Next. What is Q2 due date? 15th September. On or before 15th September, 45% of tax liability, right? That will be compared with actual advance tax paid. Difference will be shortfall. Correct? On shortfall, interest will be levied at the rate of 1% per month for 3 months. In between 15th September and 15th December, how many months are there? 3 months. So interest will be levied for 3 months. What is next due date Q3? 15th December. Minimum 75% of tax liability is required to be paid as advance tax, right? That will be compared with actual advance tax paid. Difference will be shortfall. From 15th December to 15th March, how many months are there? 3 months. So interest will be levied at the rate of 1% per month for 3 months. Q4. Due date is 15th March. 100% of tax liability is required to be paid. Correct? That will be compared with actual advance tax paid. Thereby you will arrive at shortfall. From 15th March to 31st March, because after 31st March 234C is not applicable, 234B is applicable. 15th March to 31st March, 16-17 days are there. Part of the month is also considered as 1 month. So interest will be levied at the rate of 1% per month for 1 month. Is it clear? Now, soon. How much advance tax is required to be paid in Q1? 15%. But if minimum 12% advance tax is paid, then it is default only. He is required to pay 15% advance tax, but he paid only 12% advance tax. It is default. Even though it is default, some relaxation was given. On or before Q1, 15% advance tax is required to be paid. But if he pays minimum 12% advance tax, even though he defaulted, still no interest will be levied under section 234. C. Is it clear? Next. For Q2, minimum 45% advance tax is required to be paid. Even though he did not pay 45% advance tax, still if he pay 36% advance tax, even though he defaulted in payment of balance 9% advance tax, still no interest will be levied under section 234C. Is it clear? That means a relaxation is given only for Q1 and Q2. Okay. So write down note point in case of, shall I teach? Note point. In case of Q1 and Q2, comma, in case of Q1 and Q2, comma, if minimum of 12% and 36%, if minimum of 12% and 36% advance tax is paid, if minimum of 12% and 36% advance tax is paid, comma, even though there is a default, even though there is a default, comma, no interest is levied under section 234C. No interest is levied under section 234C. Did you understand? Now, the story is not over. Wait. There are 4 incomes. First, business income in first year. Business income in first year. Next, capital gain income. Business income in the first year, capital gain income, winnings, dividend income. These 4 incomes are unpredictable at the beginning of the previous year. Do you agree with me? Can you estimate dividend income as on 1st April of previous year? We don't know how much board of directors will allow dividend. That is unpredictable. So these 4 incomes we call as unpredictable incomes. For these 4 unpredictable incomes, the quarter in which these incomes comes, from that quarter onwards, advance tax is required to be paid as per the limits. For example, dividend income is received. Dividend income received on 21st November, 90,000 rupees. Now on this 90,000 rupees, 75% advance tax is required to be paid for Q3 and balance 25% advance tax is required to be paid in Q4. With regard to this 90,000, even if advance tax is not paid, even if advance tax is not paid in Q1 and Q2, even if advance tax is not paid in Q1 and Q2, no interest will be levied under section 234C. Is it clear? So unpredictable incomes are how many? 4. Winnings, dividend, capital gains, business, like first year business income. These 4 incomes are unpredictable. So the quarter in which you receive these incomes, from that quarter onwards, you need to pay advance tax duly. Even if advance tax is not paid in earlier quarters, still no interest will be levied under section 234C. Is it clear? This is all about advance tax provisions.